Yo, how's it going, you guys? It's Market Scraper. In this update, we're going to talk about the SPY, the SPY, the S&P 500, see what's going on over here. And basically, we've been talking about for the past, since when have we been talking about this? We've been talking about this inverse head and shoulders ever since basically we were down here. We thought we'd go to the upside and then get rejected at this area over here, then go to the downside. And we basically were watching these areas over here of this shoulder as basically an area of how far we would go before going to the upside and potentially breaking out of this inverse head and shoulders pattern. And we talked about in the last update, one thing that we could be paying attention to is a line basically connecting these top areas here to form a neckline here. And if we form this line here, we can see that this was a early indication that we were breaking out of this pattern basically. So that's pretty interesting. And we can see right over here, this broke out here because this gapped up above both moving averages. We talked about in our last update that this candle looked bullish. We thought that we'd open up above the this moving average right here, which was the 100-day moving average. We thought we'd open up above the 100-day moving average. Well, we sure did. However, we gapped up even further. And so it's like, oh, where did we gap up? What were we trying to do? We were breaking the neckline. Now, one thing to keep in mind, though, there's two things to keep in mind is that there is a huge, massive gap here. And in this update, we're going to look at whether we should be concerned of a full retracement to fill this gap before a move to the upside, or if we should not be worried about that. Or basically, we'll look at some historical analysis to see if we can get an edge of what that means. Well, let's jump into this now. But before we get in this video, if you get any value from this content, don't forget to smash down on the like button and subscribe to this channel, or don't subscribe or don't smash the like button, whatever you guys want to do. Okay, let's get into this. So we can see this over here. Basically, are we going to go back to this gap fill? Well, one thing that is fairly common when we break a neckline like this, it wouldn't be so shocking if we saw a retracement that came back and retested this trend line. So if we came back over here and retested this right here, so that wouldn't be so shocking. And does that mean we fill the gap? Well, it depends on when we go back to this trend line. We may or may not fill the gap. But the question is, how likely or unlikely would it be if we were to fill or not fill the gap? Well, let's take a look at the examples that we've loved to watch and pay attention to, which were these two corrections over here. Okay, let's go to this one first. Okay, now that we're dizzy, right over here. So we look over here, this gap, was it filled? It eventually got filled, but first we had a nice move to the upside. Okay, now over here, gap. Was this filled? Not really. Okay, so that's our first data point to be paying attention to. Okay, let's go back over here. What happened with this gap over here? This is basically just trying to get some data to see if should we really be concerned about a gap being filled after a significant bottom potentially. Like if that's where we are right now, if we're looking at potentially a significant bottom in the stock market over here, is that going to be like, is it okay? Is that the exception to the rule when you make a gap from the bottom on a massive recovery? Okay, let's take a look. Well, over here, we do have a gap right here, but we did, and then a move to the upside, and then a retrace, but then another gap over here, right? So these gaps do get created. In two of these scenarios, we did come back all the way down to fill that gap. Now, one area that I've been watching in the past is when we finally broke 400, we made this interesting gap over here, right here. Now, this is a gap that I actually think that at some point in time in history could be filled, actually. This is based on the SPY breaking 100 for the first time and the massive run that we saw after that just went up, 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 up. And then eventually it went back and filled at 100. So I think that it wouldn't be crazy. And that's kind of my more longer term perspective, or not medium term perspective, that we are going to the upside and then eventually fill that gap at 400. That sounds a little crazy. This is, again, just based on historical analysis. We'll see. This is getting way too ahead of ourselves. So this is just to point the fact that I am generally speaking bullish on the stock market, especially if we're staying above the moving averages. However, I do have a view that this 400 is actually a place that could be actually filled some point in the future, just like what happened when we were at 100. And just to go back over there really quick, 'cause I think it's just so interesting when we broke 100 for the first time. I just think this is like so cool. Okay, this is like really boring. You guys probably like, please don't share this with me. We don't care. Okay, we see over here. This right here. This is what I'm talking about. This gap right here. I know this because I love this area. And this is what we talked about when we first broke 400. And right before, we were looking at this chart here and thinking that this could be a similar situation. The fact that we just rocketed to the upside and didn't look back, but eventually we filled that gap at 100. That's just super interesting. But this massive upside move, and this would imply we have even more room to move potentially. Because if we're looking at this, this is 100 right here. What is this up here? We're looking at something like, what is this up here? 118. We're looking at like a 20% move to the upside, something like that from that point. So this is a pretty significant move, especially if you go down to 90 or something. But basically from 100 all the way up to 118 or something like that. That's a pretty nice move to the upside. Okay, I digress. Anyway, the main point is that I do like that parallel. And so I am watching in terms of in the longer term perspective, looking at this as a potential retracement at some point in the future. Okay, that is besides the point. Because right now, we're actually pretty bullish right now. Again, we do think that at some point we could come back, retest this trend line here before going to the upside. But if we can get a close, especially a weekly close in this channel here, this channel is like the reversion to the mean, basically. We saw we had a spike to the upside, back to the mean. Spike to the upside, back to the mean. Spike to the downside, back to the mean. We like trading within this channel here. So once we get back up here, I could see us just trading back in this channel here. This is what we like to do. Now, once we do break up here, we'll start to look at some areas of potentially resistance. But for now, we're going to see if we can hold. This is bullish because we're above both moving averages, all the important moving averages, in addition above this trend. But this could be a one-hit wonder here, a one-day wonder before going back down. Again, it could be going for the gap or simply retesting our trend line, our neckline. And that's our opinion at the moment. It will just depend. We'll have to watch basically the next day or so to see, does price stay above here or does price go below? And if price goes below, we're expecting a hit on this trend or potentially a gap fill. That is our bias at the moment. I hope you guys got some value from this content. If you haven't already, smash that like button, subscribe to the channel for more content like this. I'll catch you guys in the next one.